About 7 years ago, I stumbled upon the term day trading and I got really interested. Like everything else I do, I dove headfirst into watching YouTube videos. But I quickly realized that there was a ton of information out there, which can be a very good thing, but it can also be very overwhelming. So if you are brand new to the concept of day trading and you want to get started in 2023, then I'm going to make this short, sweet, to the point video on 3 steps you need to take. And the first one being choosing the correct stockbroker for your goals. I'll go over ones I have used and my main platform I wish I would have just started right away with. Step 2 is picking a simple strategy to give you an edge in the markets. I was starting with 4 or 5 different strategies and I didn't even realize how wrong that was. So I'm going to go over a simple strategy I wish I would have started with. And then step number 3 is funding a small account, but also before you do that, making sure you're setting proper rules to keep your emotions in check and also making sure you're paper trading with this strategy to prove it works before you throw in real money. And if you found this video valuable, make sure to give it a thumbs up. You can check the description box down below for any extra freebies as well as a education focused trading community. But with that being said, let's dive into step number 1. Step number 1 is finding a stockbroker. Now I have used multiple over the years, all of these on this chart and a few more, but I will say my all-time favorite and the one I'm going to go over quickly with you guys is Thinkorswim. I have a full tutorial on my YouTube channel, so if you end up going with this one, you might find that helpful. But I also want to list these others because you guys might have different goals than I did starting out. For me, I wanted to start with the broker that was going to give me the most growing room in the future. So I knew I wasn't going to start off as an advanced trader, but when I eventually got there, I wanted to be on the platform that allowed me to become the trader I wanted to be. Now, a lot of people will start with something like Robinhood because it's super beginner friendly. I definitely have used Robinhood over the years and I still use it as my lotto account. It is extremely beginner friendly. So if you are intimidated by something like Thinkorswim, like I show you today, then Robinhood might be a great place for you to start. It will be very limiting once you grow. So if you decided to become a full-time day trader, this really isn't realistic. I would probably say more of a swing trader could start out with Robinhood or a long-term investor. But if you are looking to become a serious day trader down the line, I highly recommend some more advanced software like Thinkorswim. Webull and Robinhood are kind of the same category. They do have a desktop app now on Webull, and I did a tutorial on that one as well. I put interactive brokers up here because I know that some people like that platform, or it's their only option if they're out of the US, or maybe they want to get more into advanced high quick fill orders for options trading. That's really, really up there. So you might want to check that one out. But for me, I personally like Thinkorswim, and that's the one we're about to dive into. So Thinkorswim is the software made by TD Ameritrade. When you go sign up for their platform, you can then go to trade and then trading platforms, and that'll bring you to these options here. I personally have the mobile app downloaded and I have the Thinkorswim desktop as well. I do not use the web version. I am mainly in the desktop version. And once you get all set up and signed up, it will look like this. So this is the Thinkorswim software. It is so advanced when it comes to being able to do technical analysis, study charts, and do advanced order brackets, which are all things that if you are a beginner might sound like foreign language to you, and that is something you can definitely learn as you go. But just know if you are looking to take this seriously and become more advanced down the line, I think it is worth the learning curve that Thinkorswim can be in the very beginning. Reminder, I also have a full tutorial on this broker, Thinkorswim, to break it down in beginner-friendly terms. So I hope that if you do choose this one, you find that helpful. You can find the video probably linked at the end of this one or up top in the corner. But if you decide to go with something more beginner-friendly like Robinhood or even Webull, I completely understand that. I think the biggest thing is just finding a platform that you feel confident enough to move forward with. Whatever that looks like for you, by all means, do what fits you best. And they do have different, they do all have a few differences when it comes to commissions, depending on what you're going to trade. So for example, if you're looking for $0 commissions on stock trading and options trading, Robinhood is a good one. Webull mostly is $0, but they just changed a few of their SPX option contracts to now charge a fee. Thinkorswim does charge a fee for options trading, but not stock trading. So for me, with the advanced platform, it is worth it to pay the fee in my own personal opinion. So that's why I'm sticking with Thinkorswim regardless. And I have been using them for over 7 years now, not sponsored as I'm making this video. That would be cool in the future, but my honest opinion, and I have been with them for over 7 years, which definitely says something. Step number 2 is once you pick your stockbroker, you open your account, you need to get very, very familiar with that software before you move to step number 2. And step number 2 is just basically understanding what TA is, or technical analysis, and then picking a basic strategy that you fully understand how to execute. And so, for example, technical analysis in simple terms is just going to analyze a stock chart, which we just looked at, and you're trying to use previous data or data on the chart to determine if the trend is bullish or bearish. And this is just a very simple definition. You can get really, really advanced when it comes to technical analysis, but we're going to start with the basics because this is a beginner-friendly video, and we're going to talk about trend. So bullish trend, the stock is making higher lows. Bearish trend would be the stock is making lower highs. And I'm going to show you an example of each. Okay, say the stock market opens and you see the stock do something like this. It opens, it makes a high, it pulls back, and then it starts to make another high. So this would be considered a bullish uptrend because we have a low of day, we have a high of day, we then came back to print another low of day, and we started to move up. So we are forming higher lows. Since this low did not take out this one, that is a bullish uptrend. It would look something like this, and then we're continuing to the upside. So this is a bullish trend to the upside, aka the stock is increasing in value. We are making higher lows here. Now the opposite of that would look like a bearish trend, or where we were making lower highs. Now bearish trend could look like the stock opens, it makes a high of day, we pull back, we take out the low of day, we then try to attempt a new high of day, we fail, and now we are making lower highs. So it's the opposite. We are making lower highs and we are forming a trend to the downside, aka the stock is decreasing in value. And you can make money both ways as long as you know how to do that. Now let's go back to the bullish uptrend, and we're just going to use a simple strategy example of what it would look like to buy the dip on a bullish uptrend. We're going to use AMD as a quick example because I know we just played this one on Friday. So I want to show you guys what a basic trend line looks like in real stock market world and not fake little lines on my chart. So AMD is actually in a trend channel, and all that means is you can see that we are making higher lows. So we are in an uptrend. So this is the bottom trend line to this channel. And then I did a top trend line here, which creates the channel. And it's basically me just matching the highs. So as we are moving up, we have created a channel off of these trend lines. And remember, trends are the basic foundation of technical analysis. You have to be able to spot trend in order to have a strategy, in order to be successful consistently with trading. You can't just randomly go in without a strategy, without understanding trend, and just execute trades and hope to be consistent. It really doesn't work out that way. You might get lucky, but eventually it will stop working. So for this trend channel, you can see that we were in a bullish uptrend because we were making higher lows. So a simple strategy of mine that I wish I would have just started with in the beginning and mastered this before I moved on into the fancier things, because it's all about foundational work. You have to have your solid foundation before you move on to advanced techniques. If you don't get the basics, you're not going to get more advanced things. So if you are playing a bullish uptrend and you're looking for the simple strategy of buying the dip off the trend line, and so as long as we are making higher lows, a buying the dip off of trend line could look like I buy stock or calls, depending on if you're looking to day trade stock or options. Then once this trend line proves that we are holding, I can purchase stock or calls to then try to see if we can hit the top resistance of that trend line. And you can see that happened 1, 2, 3, and then right here we tried a 4th time and eventually we failed this channel. So the trend broke, therefore your strategy might not be working as well. However, if you're looking at big picture, we still are in a technical uptrend because this low did not get taken out by this dip. And so as long as we are continuing to make higher lows, then you can buy the dip until trend break. And that's a very simple way to start. There are tons of strategies. I go really advanced into a lot of my scalping strategies when it comes to options in my 8-week program. But just for you guys to start basic, I would definitely master trend line bounces before you move into something more advanced. Let's go over one more example. Tesla is a very wild stock, but I will say it was making a trend line here that you could have played off of. So trend lines can be very subjective, which is where it can get kind of sticky. But as long as you have a general idea of where trend is, you should be okay. And remember, trend is created depending if we are in a bullish trend or bearish trend. So since we are forming higher lows, we are in a bullish trend to the upside. Therefore, every time that we get close, but we don't break this previous low, that could be a dip buy entry to then sell on the next pop. And so you can see we hit trend here, 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 and here. We were holding and making higher lows. So each dip was a potential buying opportunity to the upside. That was on the 1-minute chart, so I do want to switch over to the 5-minute really quick to show you an example of what it looks like when trend breaks. So you can see if we draw a simple trend line here, we've got 1 hit, 2 hit, 3 hit. We broke trend, and then now we are going down to a bearish trend until we find a new low, and then we start to form higher lows. So there are different time frames that you can trade on. Again, this is where it gets more advanced, but if you can just start to recognize patterns when it comes to trend and drawing those basic trend lines and seeing if you can start to recognize this simple strategy of, okay, if I'm looking for dip buys on a bullish trend, what am I looking for? And just train your brain to only look for that strategy until you master it and then start to layer on top of it. So we just went over the basics of TA, technical analysis, aka trend, and we were looking at bullish trend versus bearish trend. We also went over what it looks like when a stock is making higher lows versus making lower highs. And if you are going to use a simple strategy like buying the dip, then you are looking for those trend lines to form and hold higher lows for you to then buy the dip. If trend breaks, you're no longer able to play that trend. If you are looking to play a bullish trend, you have to understand when that trend is going against you and no longer valid. So step number 3, and this will be the last one to wrap this up, is create a small account challenge for yourself and create rules. So we talked about picking a strategy, right? Buying the dip, waiting for that higher low to form to play off bullish trend. This is just an example, guys. You can do whatever you want, as always. This is not financial advice. This is just if I went and had to start over, where would I start to just not overwhelm myself? So buying the dip, that could be a place to start just to get in the swing of things. And then paper trade. So before you even start a small account challenge, we need to go over what it looks like to paper trade. And this can be a combination of step 2 and 3 if you want to include paper trading in that. But basically all it is back testing your edge. You're using a trading simulator to practice your strategy with fake money, aka Monopoly Man. So the software that I just showed you, Thinkorswim by TD Ameritrade, if you go to the top right-hand corner and click on demand, this will allow you to paper trade with fake money. So if you want to go in and see what would happen if you bought 100 shares of a stock at a certain price, you can do that with fake money and not risk anything to just make sure that what you're doing is working. This is the step almost every single person who fails has skipped. And I can say that with confidence because I have taught over 400 people, and I know a lot of them who ended up failing in the beginning did not take the time to learn a strategy, did not take the time to practice their strategy, and they also definitely didn't take the time to set up rules to prevent themselves from blowing accounts. So hence why I decided to make this video for you guys. I hope you find it helpful. But for example, if you are day trading and you want to get started and you found that strategy that makes sense to you and you come in here with fake money, this is where you prove to yourself that it works. So this is where you go and you take trades. You start to train yourself to look for those setups, and you can go up here in the top right hand corner, click the drop down menu, and you can go back to any day or time. You can change it to any stock ticker you want. And like I said, I have a full tutorial on Thinkorswim that could help with this, but basically make sure you are paper trading to prove whatever you're doing, whether it's dip buying on a bullish trend or whatever strategy you pick actually works before you put in real money. So we just talked about paper trading after you pick a strategy, and that leads me to the actual last step, which is step 3, and that is create rules. And this exclude emotions part right here is so key. By creating rules, you are in fact helping to exclude your emotions from trading. A lot of times, people who don't set rules have sporadic trading with no strategy, and that's where they get really emotional and lose a lot of money because they don't have any rules in place. So just like a diet in a training program, I think 20% exercise, 80% diet for you to actually see results. Same thing with trading. I think 20% strategy, 80% execution. You could have the best strategy in the world, but if you don't have rules that force you to follow that strategy, you're going to fail. So set rules and practice them with play money. Real money, in fact, does equal real emotions. And since I can't give you guys step-by-step rules to follow because I really don't know what strategy you're going to pick and what risk management plan you're going to choose, all of those key factors, I can just tell you that me personally, I have a few rules that I always try to follow. One of those big rules for me personally is I do not trade the first 30 minutes of the day at open because it's the most volatile time. And if I am trading, I'm scalping only with very, very light size. So I typically save my sized trades for later in the day. And there are several reasons for that. It works for me based off of my strategy, but I really don't like trading the first 30 minutes because it is the most volatile time, but it's also the most chaotic, and it's the easiest time for you to get overwhelmed and stopped out. Another rule of mine is, yes, I do like to trade penny stocks, but I do not trade options on penny stocks unless it's considered a lotto. I really like to stick to my watch list for my large caps on options. And so since I'm an options trader, but I also trade penny stocks, I do keep them separate and I have different strategies for each. So if you do decide to play options on something like a penny stock, for example, then just be very, very careful with doing that. Make sure they have a ton of volume and liquidity, and make sure that your strategy can actually be used on them, because a lot of times technical analysis isn't the best thing to use on small caps or penny stocks. And one more rule, we'll go back to SPY, is if you go to the trade tab over here, it will show you the options chain. And my rules, again, are more geared towards option trading because that's what I do. But I like to stay away from 0 DTEs unless they are a scalp or lotto. And so if you are just getting started day trading and you decide to trade options, just be very, very careful with those short-term expiration dates. And that wraps it up for my day trading guide for 2023, how to get started if you're a beginner. I know there's so much more that goes into it, but I hope that simple blueprint and just step-by-step process on what I would do if I started over helped you guys. If you still have questions, let me know in the comments down below. I do want to go over before we end this, the fact that I have an education-focused community that I mentioned earlier in this video. And so it includes my entire 8-week program, which can take somebody from a brand new trader to an advanced day trader, independent. I'm all about education to allow you to be able to do this on your own and then interact in the community. That's where most of the value comes from. I'm not somebody who just wants people to blindly follow alerts. But this is the breakdown of the 8-week program. I also am now just creating a scalping playbook, because basically when you get to the end, the most advanced things that you are going to learn in this program are not only stock trading, swing trading, day trading with stocks and penny stocks, large caps, etc., but also options trading, and then going into the most advanced type trader you can be, in my opinion, which is a scalper of options. And so that is coming soon in 2023, as well as a bonus. But if you guys are interested, the master description link is down below. I also have extra freebies that I mentioned earlier. And then if you just want more free content, make sure to subscribe to my channel. I try to post as much value as possible. And if you want to catch me on a day-to-day basis, make sure to check the description box for my Instagram handle. Please be aware of spammers, guys. I do not trade crypto. I will never reach out to you. Do not fall for that. And I will never request to DM you, all that good stuff. So I will see you guys next week.